It didn't start with banks collapsing. It started with people doing exactly what they were told. Buy a house, it's safe, prices always go up. And for a while, they did. So here's why this still matters. Because the same pattern, easy money, rising prices, blind confidence, keeps showing up again and again, just with different names. Now imagine this. You want to buy a house, but you can't really afford it. No problem. The bank says yes anyway. Low income? Fine. No savings? Still fine. No proof you can repay? Somehow? Also fine. These were called subprime loans, risky loans, but they didn't feel risky at the time because here's the trick. The bank didn't plan to keep your loan. They would take your mortgage, bundle it with thousands of others, and sell it to investors, like packaging risky debt into a shiny box and labeling it safe. And the ratings agencies, they stamped those boxes with AAA ratings, the highest level of safety. So now, pension funds, big institutions, even governments were buying them. Everyone thought they were holding something solid, but underneath, it was built on people who couldn't actually pay. Now add gasoline. Interest rates were low. Money was cheap, so more people borrowed, more loans, more houses. Prices kept rising and rising and rising. At some point, it stopped being about homes. It became about flipping houses for profit. Buy, wait, sell, repeat. The system looked unstoppable until one small thing changed. Interest rates went up. Suddenly, those cheap loans weren't cheap anymore. Monthly payments jumped, and the people who were barely holding on started to break. Missed payments, defaults, foreclosure, and now the illusion cracks because those safe investment packages, they were filled with failing loans, so their value dropped fast. Banks stopped trusting each other, lending froze, liquidity vanished. It's like the entire financial system suddenly realized it didn't know what anything was actually worth. And when trust disappears in finance, everything follows. Major banks collapsed, markets crashed, trillions of dollars evaporated, all from one uncomfortable truth. The system made more money by ignoring risk than by managing. Think about that. Every step of the chain, brokers, banks, rating agencies, investors got paid more by saying yes than by saying this is dangerous. So that's exactly what they did. And here's the irony. The people taking the biggest risks often weren't the ones who paid the price. Millions lost homes, jobs disappeared, entire economies slowed down, but the system itself, it survived, rebuilt, moved on. Now zoom out. This wasn't just a housing problem. It was a trust problem, an incentive problem, a blindness disguised as confidence. And the uncomfortable part, those ingredients haven't gone away. Easy money still exists. Complex finance